All right, everybody, here we go. Welcome back to the channel. It's Millennial Trades. It's December 15th, 2022. Let me just double check that. So we are halfway through the month. What a volatile day to the downside in these markets. I'm looking at the future contracts right now. I mean, we ended the day down like 3.5% for the NASDAQ, another like almost 3% on the SPY. Volatility index kind of spiked back up. We're getting closer to that 24 level on the VIX. And the dollar today, I mean, it looked like it was going to be a really bad day for the dollar when the market opened. And then the dollar turned around, broke its pre-market highs. I mean, it's just absolutely incredible. I mean, you look at the move on the futures. I mean, that red candle, today's red candle is it looks extremely bearish. Now, who knows? Maybe they'll try to pump it up again tomorrow or early next week. As far as these rallies, we see these rallies happen, especially right at the open. I've been just in this mindset where let them have it, short the rally, and that's kind of been working for me. Sometimes I get in these trades a little bit too early. Sometimes I go short. And when I say short, by the way, guys, I want you to understand, I'm talking about put options. All right, I'm not actually shorting the stock. I'm using puts to gain exposure to any sort of down move. So when I say going short, that's always what I'm talking about. I don't actually short the stocks. I buy the puts. The risk is defined, and it's very easy to scalp in and out of these option contracts. What did that have to do with anything? Yeah, so I enter these trades sometimes a little bit too early. Sometimes I go short or long, whatever the case may be, right at the open, and I'm initially wrong on my entries. The thing is, you can't really panic, especially in these choppy markets that are trending down. When you see your stock kind of, let's say you're short, or let's say you have puts, and you see the stock go back up, you can't just panic and sell because you have to realize where the overall trend is. You have to be able to leave money on the table too. Psychologically, I left a lot of money on the table. I mean, if I had held my puts this morning that I was able to scalp $600 off of, if I just held those, it would have been incredible. It would have been an incredible day. But that's not really the way I trade, because when I get in and out first thing in the morning, which is what I try to do, it doesn't always happen that way, but that's generally my goal, is to scalp as quick as I can. I'm not really looking for the long-term move of the day or the long-term, I'm of course keeping an open mind as to whether the stock could go up or down. I'm always trying to keep an open mind towards both ways, but I'm not trying to catch the entire move for the day. We're talking about quick little scalps. The move that made me $600 was it was probably about half of what the actual daily move was. Now, the thing with option contracts, let's say it goes in your direction and then it starts to slow down a little bit, those option contracts, eventually their premium starts getting eaten up, especially if you're not at your strike price, right? Let's say you're still $2 or $3 outside of your strike price. Well, as the week goes on, especially if you're buying the contracts that expire that week, you'll notice, that the longer you hold the contracts, the more the premium sort of eaten up by the fact that time has gone by, but it has not hit your strike price. So let's say I'm trading options that are outside of the money, right? Let's say they're $2 or $3 outside of the money, which is generally where I've been buying these contracts at, whether they're calls or puts. It's mostly been puts because we're in the downtrend right now. And I'll explain about the news too, why I was in this short trade based on news. But you put all this together and you got to be able to leave the money on the table, right? Because it's very easy to fall down this trap where you think, oh, if I had held 15 more minutes, I would have doubled my money. Or if I had just held till 11 o'clock or 12 o'clock, I would have doubled or tripled my money. And you can't really think like that, because especially if your plan is to scalp. If your plan is these longer day trade moves, which might work for some people, that's fine. But if I find it hard to stomach, especially because I'm putting 20 contracts on at one time. I'm trying to get rid of those as quick as I can. You guys don't. Some of you may not understand how scary it is, to put 5 contracts on, buy another 5 when you're down a little bit more, buy another 5. And then when it starts turning around in your favor at a supply zone, you say, fuck it, I'll buy 5 more. So you got 20 contracts on. It's scary. It is scary. You've got $2,000 or more in the trade. But once it goes in your favor, it's extremely easy because of the volatility of the option contracts. It's extremely easy to scalp hundreds of dollars every single day. At least it has been, right? Could I end up on a losing streak for the next month? Sure, it's happened before, but these down moves, especially right at the open, they have been fairly easy to take advantage of. Now, if I was not paying attention to news, I would probably be getting caught up in a lot of these fake bottoms, a lot of these bull traps, I guess you would call them. And so, paying attention to the news, the main thing that came out this week, obviously, was the interest rate hikes. Whether it's 50 basis points, which it was, or I was maybe expecting more than that. I thought the Fed would be capable of delivering 75 basis point rate hike. I was way off on that. It didn't happen. But the 50 basis points here in America, that rate hike, and the ECB and the UK Central Bank, all of these banks this week raised interest rates by 50 basis points. That's obviously not good. The markets aren't going to like that. It's going to cause risk aversion in the market. So that was number one. Number two, today we had U.S. retail sales falling more than expected. Retail sales in the U.S. declined 0.6% month over month in November. Much worse than market forecasts of a 0.1% decline. Well, what is retail? What is Amazon? Amazon's retail. So that was another thing that clicked, because this came out before the market opened. And you can see all this on tradingeconomics.com. As soon as this news comes out, it's right there. So you had those two reasons right there, right? The rate hikes causing risk aversion. Then you had the retail sales falling more than expected, which means Amazon is negatively affected by these retail numbers because Amazon is retail. And then also the third thing was the dollar. If you're watching the dollar, you would have been able to trade these markets because you would have known which way the market was going, because the dollar was surging. It looked like it was going to be a bad day for the dollar. I told you guys that. It looked like it was going to be a really bad day for the dollar, right? But we actually ended higher than where we opened. We ended higher than the pre-market high. The dollar had a great day. It looks similar to the VIX, the volatility index. Bonds as well, I think, closed around the point where they opened, so they didn't do as bad as stocks. We could see a sort of a situation here where the bonds go up, the price of the bonds go up while the stocks still continue to fall. It's not good, guys. I mean, the macroeconomic environment is just not good for stocks. It's not good for investing. This is going to continue into 2023 and possibly into 2024. So I expect these markets to continue not only to chop around at these lows, but probably to break new lows. I mean, I don't know. Did Amazon break its low? I don't think it broke the recent low, but we took out some bottoms. I mean, if you look at the Amazon chart, we went lower than we had a couple of days ago when we fell. I mean, the charts just do not look good. They look extremely bearish. I don't care if we're looking at Amazon, PayPal. I mean, Tesla continues to fall. Elon Musk continues to sell shares of Tesla stock. We are in a very, very serious situation here. This is why I'm focusing on my cash position. And I have over $9,000 in the trading account now. And I'm not bragging about this at all. It is a very good feeling, having almost 10K in the account, right? My goal is to get it to 10K. And for now, anything over 10K, that's probably going to be like my deposits for a while. But my main goal is to get to 10K. And this has been a goal I've had for the last couple of months. I knew I wouldn't achieve it overnight, but I knew if I kept working at it, even if I made deposits, which I've made serious deposits back into my bank account because I'm making money from the markets, may as well have some reserves in the bank. I got to pay bills, this kind of thing. Focusing on that cash position, building that cash position, extremely important. Now, I did buy metals today. All right, I should have brought them with me. I have them actually in the other room. I won't get them now, but I did buy metals. I bought some silver, and I did buy a piece of pre-1933 gold, which I think is really good to have. It's kind of historical. There's a collector value to something like that. They still don't have coins with the king's face on it. I went to my local bullion dealer, the Silver Eagle in Virginia Beach, and they still do not have any coins with the king's face on it. They said that will be coming probably next year. And I'm looking forward to that because I really want some Britannias with the king's face. But I did buy some more Britannias on there. I am happy to report that the silver shop had plenty of silver. I was able to pick up a roll of quarters as well. There was no shortage of silver in this particular shop. He had everything. He had uncirculated halves. I wanted to buy some of those. I was like, I think he was offering about $260 for a roll of uncirculated halves. I wanted to do it really, really, really bad. These halves looked extremely beautiful. The Kennedys, they were uncirculated. It was amazing. Pre-1964, I guess. So yes, I did buy some metals, just because I like having them. I know I'm kind of, I should probably wait to see if metals fall substantially. We just don't know exactly what's going to happen, and I like having the metals. Like, I just like knowing I have it. I can take pictures of it, post it on Instagram. It's just a cool hobby. And maybe someday I could flip some of these and trade them. I'm not actively trading metals now, but I've kind of had that thought, like, well, maybe in the future, once I built up my stack, and maybe metal prices are a little bit higher than they are now, maybe perhaps in the future I could, flip some of this stuff, make some money off of it. At least I'm preserving some of my wealth into the future, right? Because if you hold it all in dollars, that just seems like a bad idea, to hold everything in cash. Every single cent of your net worth in cash. To me, that sounds like a bad idea. So I just like having the metals. They're pretty. They're historical. That's my main reasons for buying them. I'm not buying them to make money. I'm not buying them because, I hope I'm going to get rich off of silver. I really just like having the metals, right? I like the jewelry. I like it all. I like the bullion. So, that's where we're at with that. With all these rate hikes, you've got, most of the world now the Western world, in lockstep, is just doing the same thing. Whatever the Fed does, the ECB does, the Bank of the UK does, and we have to realize what kind of environment we're in. This isn't particularly the environment where I think the bottom is in. I don't. I think the bottom is not in. 2023 is going to be a very difficult year for the market. It's going to be a very difficult year for people's portfolios, and the good thing about this is it provides a lot of, the great thing about the bear market, it provides, especially newer traders like me, this entire experience. Like, if we had been trading just 5 years ago or 10 years ago when we were in this grand bull market, we would have had to wait until this moment to get any experience in the bear market. But we're basically starting off with this huge bull market in 2020, which was absolutely insane. People thought it would never come down. It did. And now we're in this massive bear market where people think that the bottom's never going to, there is no bottom. And perhaps for some of these stocks, there isn't a bottom. But that makes it all the more exciting because we're trading through these higher interest rates environments, the high inflationary environments. As far as the interest rates go, these are not high interest rates at all. Let's say they cap at 5% or 5.25%. Those are not high interest rates. They're higher than near zero, but it's still not a high interest rate environment. They could go higher than that. We have to be prepared for that. Everything the Fed says, too, is arbitrary. Right, so even though we're paying attention to the Fed, I listened to Jerome Powell's speech. I listened to the whole thing this morning. I didn't have a chance to listen to it yesterday, but I listened to the whole thing this morning. I'll probably try to find the transcript and read that as well. Again, he talks about the 2% average, the 2% over time. He never says 2% average. He never puts it like that. But you'll hear him say 2% over time. But over time, it's arbitrary. The 2% average is arbitrary. It's really when the Fed says, okay, I think we're at our 2% average. But they're going back maybe 5 years. They're looking ahead 5 years. So we're probably not going to be able to get a definitive answer from the Fed as to whether or not we are set with the interest rates, right? If we're set, if we're going to peak at a certain amount, because they could always change it. You have other Fed bankers calling for 6% and 7% interest rate terminal rates, which is basically the cap. And if inflation, which I suspect it's possible that this slowdown is just sort of the pullback, and we're going to continue to see prices rise because we're still like under 10%, at least with our core inflation numbers. With food inflation, I mean, it's over 10%. It's crazy how much, because you got to pay attention to all the, there's the inflation number, then there's the core inflation that excludes food and energy. But the food prices, I mean, that's really where it counts. That's where inflation counts, because that's where we're spending most of our money on food. So it's a very serious situation. You've got people trying to leave the workforce, trying to do something else. You've got the Fed wanting unemployment up at 5%, if not higher. I mean, they say 5%, but maybe they'll want it higher than that. So they do want people, I guess, out of the workforce. They don't want to push people out of the workforce, but economically speaking, this is what needs to happen so that people have less money. It brings the demand down. There's so many different mechanisms here. But when you realize that the Fed is kind of experimenting, they're kind of like, they're almost like scientists, just sort of experimenting. I don't want to call them scientists, but they're experimenting. They don't really know if anything they do is going to work. They admit they can't accurately forecast anything. Jerome Powell said this yesterday. There's no way to know, what financial conditions, economic conditions are going to be 6 months from now. So the Fed has I mean, when it comes right down to it, they have no idea. It's a lot of guesswork. And that's what trading is too. I mean, trading is not a science. I'm not going to sit here and tell you guys that this is a guaranteed thing, that, there's some sort of science to this or some sort of equation. No, it's not like that at all. It is very intuitive. If you got 3 pieces of news and maybe a technical pattern, maybe like a supply or demand zone somewhere, you put all this together, you start seeing the trades that you should be taking that day. You start seeing the trades you should be taking in that moment. I got a comment yesterday where somebody had said that, all of this sounded very interesting. They said, could you go more in depth about your trades? I want to go more in depth as far as, sharing my screen eventually and showing you guys exactly. I mean, I do this through my shorts, but I'd like to make longer videos about the trades and about my mentality. But before we get to all that, I just want everybody to understand the psychology behind all of this, the psychology and the overall strategy. You don't need to see my trades particularly to understand my strategy and how I sort of put it together, because this strategy of reading the news and trading stocks that are highly sensitive to things like inflation or interest rate hikes, that you want to trade those stocks, mainly the NASDAQ. This S&P 500 works too, but I like the NASDAQ because, today we're down on the NASDAQ. We're down almost 4%. With S&P 500, we're only down like 2.5%. So the NASDAQ still is very much more than the SPY, more sensitive to these economic updates. Whether it's inflation, retail numbers, ECB rate hikes, it doesn't matter. Amazon's going to be much more sensitive to that than probably a Dow stock. That's why I don't trade Dow stocks. I'm trading the tech stock. Maybe the strategy doesn't work forever. That's the other thing too. A lot of strategies over time, other people start using them and the strategy doesn't work as well. This is what happened with a lot of the technical patterns, in technical analysis. This is why a lot of the patterns today fail. They don't actually follow through. This has happened with the MACD. This has happened with a lot of the lines that people use, the moving averages. Some of these things don't work quite as well as they used to. So my strategy may not work 6 months from now. It may not work a year from now, and I'll have to develop something else. But the market is ever changing, right? When the market turns around and we do go on a bull run, I don't know when that's going to be, but going short every day at the open is not going to work. And that was kind of how I got messed up last time around when the market came down the last year or so. I just kept going long on PayPal, right? I was trying to. I thought, PayPal goes from 300 to 200. 200's got to be the bottom. All right, PayPal goes from 200 to 100. 100's got to be the bottom. All right. So I just kept going long, trying to trade the long sign because I had all my demand zones charted out. From years ago, these demand zones were formed. None of them held. And that's the thing too, with supply and demand, it is a good strategy, you know, to chart your supply zones, chart your demand zones, but I don't take that stuff too seriously. I have a couple of them on there just in case the stock is in that range, but you know, there's really nowhere there's no way to tell when new demand might form or when new supply might form. You could have the old supply zone, and if those, you know, institutions took their sell orders off, that supply zone is not going to hold up. We're going to rally right through it. So trying to figure out where the big institutions as well are dumping. It's a hard thing to do, but it's not a science. There's no formula. All right, this is an extremely intuitive practice. It is similar to reading the stars. All right, I'm not going to lie to you guys. There's a magic to it, but not a magic, because everything's provided by God, right? And I thank God every single day for the blessings He's bestowed on me. I cannot believe how quickly my fortune has turned around. I've said this in another video, but I'll say it again. I can't believe it. From 6 months ago, I cannot believe how quickly my fortune has turned around. I feel so good. I feel so good about the pace of things. You know, like I said, I left a lot of money on the table today. If I had just been patient and just held my contracts for maybe an hour or two more, I would have made thousands of dollars. But I scalped 600 out of the market. I'm up over $2,000 this week. I had a couple $600 days, a $400 day, and today I made another $600 day. So I'm up like over $2,000 on the week just from trading. Like literally spending, you know, sometimes 10 minutes in front of the market in the morning. And this is another reason why I'm trading this way. I want to wrap this up here, but another reason I'm trading and I'm scalping, and I like to get out of the markets by about 10 o'clock is because, you know, I've got other things I want to do. I've got a family I want to be with and take care of. I want to give my family a good life. I want to be able to give myself a good life. I want to be able to focus on, you know, things other than just money and finances. I love it, and I love making money. Don't get me wrong, but that's why I'm trading. Not only for myself, but I want to help other people, and especially the ones I love around me. And so getting out of the markets, you know, as early as I can focus my time on doing just that. So that's pretty much my my recap for today, my expectations moving forward. I mean, are we going to make new lows on these indexes this year? It's looking like it's quite possible. But again, I'm just going to be scalping this stuff. I'm not trying. There's nothing really to hold overnight. Like I haven't found any trades, like overnight trades, or a reason to take an overnight trade. You could have traded some of this stuff to, you know, this week overnight, but again, it's just so risky. You know, a lot of people are expecting the Santa Claus rally. It has not happened, and it's December 15th. I don't know if it's going to. So that's pretty much it for now, guys. Let me know what you think in the comment section down below. If there was anything that I missed, please do let me know. I didn't have time to really follow a lot of the news today, so this video was more about price action, more about my trades. But yeah, I hope you guys are enjoying it. Leave me some feedback. Give the video a like. Follow me on Instagram at Millennial Trades. And as always, until next time, I'll see you on the next video.